What's good? Welcome back to another episode of Where the Money At. In this episode 23, this is the Jordan episode, so we finna cut up. So check it out. Today we're gonna talk about how much does a company like Robinhood make off of cryptocurrency. We're gonna talk about Binance's interactions with the Department of Justice and the SEC. Then we're gonna get into Ethereum ETFs and maybe why I need to change my perspectives on crypto. So let's get right into it. Let me share my screen. So let's just look at the prices of the crypto market. Bitcoin is sitting at around 29,100, almost 29,200. Ethereum sitting around 1840. BNB is sitting around 240, which, BNB is a pretty constant coin. I like BNB, but they're going through their issues. XRP is sitting at 66 cents. So we've had a little bit of a downturn this week with Ethereum falling about 10% in the last 7 days. So let's get into the local price action. Come on now. So like I said, Bitcoin is sitting at around 29,200. So for roughly a month between June 21st and July 28th, about 5 weeks, we ranged in between 29,500 and 31,000, but we've taken a leg down and now we're making where we had support at 29,500. Now it's becoming resistance. So we could take another leg down, probably roughly around 26,000 if I had to take a guess. But the one thing that I'm concerned about, if I pull up the EMA, then make it a 200. The EMA seems like to be something that controls momentum very well. So if we're under it and we're really under it, we seem to be going down. And if we're over it, we really get a good leg up. And it's looking like the price action is coming real close to the 200 EMA. And y'all know I'm new to indicators. This might not even be the correct EMA, but it's looking like it's coming pretty close, and we could touch it and make a decision soon. We could bounce off of it, go higher, go lower. But as you can see, if we're over it, we're really going higher, and we're just gonna have to see, because it's one of those indicators that it's pretty new to me. So let's test out the validity. I mean, the track record shows itself, but let's get into it. It's this MSNBC report that's discussing Robinhood and Binance, and it's a couple things that I want to discuss. So we're gonna go through it, maybe roughly a minute or two of it, and we're gonna break it down and talk about some highlights.
They're not taking any.
Okay, let's talk about the top stories. Robinhood's second quarter earnings report reveals a significant drop in crypto trading revenue. Robinhood's transaction-based revenue actually fell overall, but crypto is the main.
So this is the point I want to look at. So cryptocurrency on a transactional-based revenues made $31 million in quarter two, and it was already down 18%, which is more than what equities is making. And it's not necessarily about Robinhood itself, but it's showing you how much cryptocurrencies are making money and how valuable it is as a financial product. Of the three, it's sitting at, roughly a quarter of what options is making. You know what I'm saying? And quarters and futures make all the money in the stock markets, but equities make a pretty good bit, and cryptocurrencies has surpassed that, and they had a decrease this quarter. So, let's just do the quick math. 31 times 4. They're making $124 million off of cryptocurrency transactions. This is Robinhood. So if you're in the rare camp that thinks cryptocurrencies is just going away, not making this kind of money for a business, that's just not going to happen.
Main driver, tumbling 18%, partly because fewer customers placed trades. On the earnings call, Robinhood attributed the figure to the downturn in the platform, too worried about the cost to consumers. Officials are reportedly considering fraud charges against Binance, but are too worried about the cost to consumers. According to Semaphore, prosecutors want to hit the crypto exchange with fraud charges, but worry that if they indict Binance, it could cause a run on crypto like the one that followed the collapse of FTX. Prosecutors are...
See, that doesn't make sense to me. Since when is the Department of Justice worried about what happens after they indict you? That doesn't make sense at all to me. So it could be cut and dry. Look, what does the SEC do? They write fines, they get a check, and they move on. They don't really do anything. So this could be that situation, and they're just trying to play it off like, oh, the DoJ is just hesitant, or they could be serious, which raises the question of why is the Department of Justice all of a sudden so concerned about crypto users? Because they said they're worried about it because it'll cause a run on the market like they did FTX. So either they have a vested interest in crypto now because that wasn't the case earlier, or now they're actually concerned about the end user, which I highly doubt. But all of this raises questions to me, and I was also trying to find different reports, and they all kind of said the same thing. So it could be just based off of how they want the story to be spread, or I'm not sure, because none of this is really making sense. I believe if I had to take a guess, which all of this is a guess and none of this is financial advice, they're going to end this with Binance getting a fine. Because how are you considering fraud? They either did fraud or they didn't. And if they did, then you convict them. But they did, and you're either, if this is true, then they did fraud and you're not about to indict them for it. All of this sounds very confusing, you know what I'm saying? So I just think they're going to get a fine, SEC going to get a check, and we're going to move on. See, I was trying to find different stories about it, but whatever. Let's get into Ethereum ETFs. So the Bitcoin spot ETF is still in decision. And what did we talk about on this channel so much? Is about more financial products being created based off of cryptocurrency. Now that the BTC ETF is under consideration, we knew what was coming next. It's going to be Ethereum ETFs, then it's going to be other altcoin ETFs. It's just going to keep growing like that. So if you kind of have that vision, that's the type of foresight that'll help you in whatever type of asset you're studying. You kind of got to get deep into it and figure out what's coming in the future. So let's get into this article. 7 major asset managers filed Ethereum ETF applications. Asset manager firms are rushing to apply for Ethereum ETFs. They were led by Volatility Shares. First company to apply, then they were followed by Bitwise, Grayscale, VanEck, Roundhouse, ProShares, etc. So, it's not about the companies who did it. Well, it is about the companies because Grayscale has cryptocurrency ETFs already. But the point is, these are coming, and these are actually future ETFs, which just allow holders to bet against and short Ethereum in the future. That's not the real ones. Like there's already Bitcoin futures ETFs in existence. The one that they're applying for now is the spot ETF, where the company who is providing this financial service has to own all of that asset. Futures is just betting on, it's like derivatives and things of that nature. But these are futures. So what's coming after the futures ETFs. Some of these start to get approved. These could get denied and they could set a precedence. But eventually, these are going to get approved. Futures ETFs are going to get approved for Ethereum. Then come spot ETFs. And then futures for other alts and spots for those. So that's the point. We have to stay focused and we got to stay locked in and watch these things. So the last thing I want to talk about is something came across my way, and maybe I said crypto is boring, and maybe I'm not giving cryptocurrency enough credit because there's a reason why I don't cover Bald, and that coin that rugged, or Pepe, the coin that pumped, or Curve Finance. It's something to talk about. They lost 52 million. But the reason I say crypto is boring is because this happens every day. There's 1 million balls that happen every day. There's 1 million coins that rug pull every day. And then there's 1 million Pepes every day. There's several coins that pump every day. There's no point in covering all of them. And the point of investing is to be emotionally neutral, So that's why I don't cover this, because crypto been wild since day one. This is all a part of it, which makes it boring to me. You know what I'm saying? It's just a part of the game. It's a part of the theater. Like, it's a play that you've seen 1 million times over again. It's a movie you've seen over again. You know what's going to happen. You know how it's going to happen. You know the characters involved. It's just different people. It's the same shit, different day. But that's all I want to talk to y'all about today, man. Let's stay locked in and let's get this money, man. Holla at y'all later.